If you hold XRP or you're even just watching it, the last couple of days have probably been a bit intense. We saw XRP take a sharp nosedive, dipping below that crucial $2.20 mark. But here's the stat that should grab your attention right now. This dip wasn't just a regular price drop. It triggered an absolutely staggering 1,000% liquidation imbalance. Think about that. 10 times more long positions wiped out than short positions. This is a massive exposure of the overleveraged positions in the market, and it raises huge questions. Is this price crash the start of something worse, or did it just clear the decks for a potential bullish explosion? We're diving deep into what this chaotic liquidation means for XRP's future, and I'm going to give you my honest take. No time to waste. Let's get straight into the data. Okay, let's unpack this 1,000% imbalance because, honestly, it's a critical piece of the puzzle. According to data from CoinGlass, on April 30th, XRP saw nearly $14 million in long positions get liquidated, compared to just around $1.5 million in short positions. This isn't just a number. This shows you just how heavily traders were betting on XRP's price going up using leverage. When the price started to dip, all those leveraged long positions got hit. As the price went down, stop losses were triggered, margin calls were missed, and exchanges were forced to sell those positions automatically. This cascading effect is what accelerated the price drop, pushing XRP down to that $2.15 low point you saw on the charts. So what happened after that brutal flush? XRP actually bounced back relatively quickly from $2.15, reclaiming the $2.20 level. This level is acting like a magnet. Prices keep hovering around it, showing it's a key psychological battleground for both buyers and sellers. We also saw a noticeable drop in XRP's futures open interest, about a 4% decrease. This drop in open interest confirms that leverage positions were flushed out. Traders either got liquidated or they proactively closed their positions, reducing overall leverage in the system. This could be interpreted positively. Less leverage means a potentially healthier, less volatile market going forward. However, there's a but. This bounce hasn't fully convinced everyone, including myself yet. We're seeing a bit of a tug of war in sentiment. Some argue the weak hands are gone, paving the way for upside. Others, though, are pointing to slightly worrying signs in the underlying momentum. Look at indicators like the Relative Strength Index, or RSI, and the On-Balance Volume, OBV. So the RSI is hovering around 55, that's pretty neutral, not really showing strong bullish momentum just yet. And, the OBV, which measures buying and selling pressure, hasn't shown a decisive breakout upwards. This technical picture honestly shows a market on edge. It's still unclear if conviction from buyers will actually take over or if, caution is going to lead to further downside. The bounce is definitely encouraging, but honestly, the follow-through really needs to be strong. While the market is super focused on short-term price swings and liquidations, Ripple is quietly building the infrastructure for massive long-term adoption of XRP in the financial world. So, putting it all together, the brutal liquidation, the technical tug-of-war, and the undeniably strong fundamentals, what's my take? My opinion is this recent dip, fueled by that massive liquidation cascade, was likely a necessary, albeit painful, shakeout. The market got too greedy with leverage on the long side. This flush has potentially cleared out many of the weak, over-leveraged positions, creating a cleaner slate. While the technicals are still battling around $2.20 and momentum isn't exactly screaming buy, the fundamental catalysts I just mentioned are building immense long-term pressure. I believe the market is currently underpricing XRP given these fundamental tailwinds. It's only a matter of time, in my view, before these fundamentals start to heavily influence price action. So this recent dip, while, it can be a bit scary for some folks, actually looks more like a chance to accumulate for the long term, if, of course, you're fundamentally bullish on XRP's use case and Ripple's ecosystem build-out. The risk of further short-term volatility is definitely real, but honestly, the potential long-term reward, especially with institutional adoption and possible ETF approval, seems way higher. And just to share, I'm personally watching that $2.15 level pretty closely as a key support bounce zone. Now, as always, the most important part. This is not financial advice. Crypto is incredibly volatile, and you can lose all of your invested capital. Prices can continue to drop. Do your own thorough research, understand the risks, and, never invest more than you can afford to lose. My analysis and opinion are for educational purposes only. Alright, if you found this deep dive into XRP's liquidation chaos and fundamental strength helpful, make sure you are subscribed to Zacchy Crypto Update. Hit that notification bell so you don't miss the crucial follow-ups on XRP or other major market moves. Let me know your thoughts on XRP in the comments. Are you bullish or bearish after this dip? Thanks for watching, stay safe out there in the markets, and I'll see you in the next video. Peace.